Well, Brian, it actually comes down to truly understanding the equations.
Yeah.
And it's not just understanding the equations, it's understanding what fits into each one of the segments of the equation. Like understanding what's an asset, understanding what's a liability, and understanding what's an equity, and completely understanding what its natural balance is.
We haven't gotten to that yet, but
I
yes, you're
know
right.
it's coming, but it's all part of it.
Yes, yes. Those are the key items that you mentioned, Todd. Uh, what accounts go where? And you mentioned some other things, but again, what accounts go where? What accounts are associated with what type of balance sheet item or income statement item, right? And where do they fall on each of these statements? The last one being something you'll learn later, which is whether it's a normal debit balance or a normal credit balance, but we're not there at this point. It's just understanding that equation. So if we go back to our equation, let me just make this bigger, a little bit bigger. So assets equals, oops, equals liabilities plus equity. That equation will be tested over and over and over, right? So cash goes there, accounts receivable. This is my simple, straightforward way of doing it. Accounts receivable, equipment goes in here. Oops. Oh my goodness. Did I hit F1? My bad. Equipment goes in there.
Supplies.
Yeah, well, yeah, just supplies. The word supplies is an asset account. Supplies expense is an income statement account. So don't be tricked by that.
Yep.
They basically consider supplies the same thing as inventory or similar to inventory, something that you might buy and then sell later on to somebody, right? That's an inventory item. It could also include goodwill, patents. It could include land,
Land, buildings.
buildings. Thank you. You know, anything that's like either a tangible asset, something you can hold and sell, hold and use to buy something, um, or it's non-tangible assets like patents, goodwill. Um, uh, there's another one. I'm thinking of it. It's coming to me. Anyway, non-tangible assets. Like customer list tends to be a non-tangible asset, but that's part of a sale, not necessarily part of what would actually go on the balance sheet. Okay, on your liability side, you're looking at something like accounts payable, notes payable. I'm doing this shorthand because you'll see this a little bit more. Notes payable, you'll see mortgages, you'll see salaries payable, payable. Goodness gracious. You'll see taxes payable. So you'll see a common denominator here. Payable tends to be in the word liability of some sort or another. Sometimes it's not, but think of your own personal situation. If you buy a house, you buy a car, you buy something on credit, you're going to owe somebody something, right? So anything on credit is here on the liability side. And then on the equity side, you're going to usually see common stock. You'll see something called, I'm going to call it paid in capital common stock. Let's see. You'll see something like treasury stock. You'll see dividends. You'll see retained earnings. Oops. What else will you see here? Those are the common ones, something like that. And so as long as you know where these tend to go, then it's easy to match them up with what side of the equation and solve for the unknown. on the income, this is usually on the balance sheet, right? Now the little trick here, though, I'm going to expand this a little bit. Net income isn't really an account, but it tends to show up in the balance sheets and stuff like that in equity. Net income really is the combination of the revenue and the expense accounts, right? So when you take the net of this, net income F2 or loss, if you have 100 here and 90 here, then you'll show, that minus that in net income. It flows to the balance sheet in a line item called net income, but there's really no, I guess there is an account. It's called account summary, net income and loss, but effectively it's an aggregator of all the revenue and expense account information. So really, in the long run, revenue and expense rolls up under equity, even though it's a separate, it's reported separately as in the income statement. Okay, I got that wrong. Income statement, and this tends to be everything associated with the balance sheet. These are your two core statements. You have a couple of others like the statement of retained earnings or a statement of cash flows, but those are all derivatives of these accounts. Does that help, Nikki? All right, Josh, you doing okay? You following me?
Yeah, I'm with you.
Okay. Hopefully I'm not losing anybody. I do that sometimes, so you have to pardon me. Yeah, I've been told I need to slow down because my mind works a little bit too fast on these items. I get to the end answer faster, and I sometimes skip the details in between, and it loses people. So you'll have to forgive me sometimes. Just feel free to ask a question, ask me to roll backwards and replay slowly. Okay, so those are your basic, that's what you're going to be primarily dealing with this week.